Chinese markets are going to gap this weekend. So futures, they're going to be gapping up really strongly or down really strongly. Why is that? We're going to talk about that here in a second. But we also need to talk about the stock market is at all-time highs. Gold is at all-time highs. We just came off inflation data here in the US this week. And guess what? Next week, we have a lot coming up. We have the ECB meeting. Got a ton of Fed speak once again. So we're going to talk about all this and more, everything that's happening this next week that could influence you in the markets. So welcome to the week ahead video. My name is Blake Morrow with Forex Analytics. We're going to be covering all the events that could be moving the market this next week. And we're going to be talking about some of the best technical setups as we get into next week as well. So let's get into it and let's start with China. And I actually want to discuss a little bit what investors are expecting next week or over the weekend regarding China. The Ministry of Finance is going to meet on Saturday, and they're going to be talking about, and you can see this recent Bloomberg article about most investors are expecting about 2 trillion won, or that's about $283 billion worth of fiscal stimulus. You know, if you look at the Chinese markets, and I'll take you to them right now. Just you can see with the China 50 markets, and we'll just use this CFD right here. You can see we've had an extreme pullback after it's about a 40-45% run in the Chinese markets following their stimulus measures, but we've seen about a 20% decline from there as the markets expect a little bit more from China. So this weekend, it's going to be a big deal when the Ministry of Finance does meet and they talk about, you know, how much stimulus, if they're going to provide any stimulus. So here's the thing, and we were having a really good conversation today on the F.A.C.E show. Now remember, you guys can catch us free every day on the F.A.C.E shows and the well, not only the F.A.C.E show, but you can also find us on the Flow show. That's the European show. Then the F.A.C.E show is right here. You can register. You can be in attendance, throughout the course of the week. We were talking about that this week on China and the stimulus measures, and Ryan Littlestone, who's the host of the Flow show, he was talking about how, investors should be satisfied with what they've seen from China over the last couple of years. Over the last couple of years, we've discussed the shotgun approach that China has taken to stimulate their economy, and they came out with the most recent bazooka over Golden Week. And yeah, that obviously got the stock market excited in China, and it got investors excited, but you can see that excitement has waned a little bit. Regardless of what happens over the weekend, I still feel that these Chinese markets are going to be fairly well supported, especially as we're coming into this support. And we've talked a lot about that this week. And so I would be expecting, if you're trading these Chinese markets and you're looking for some sort of level of support, as we come down to the key Fibonacci level around the 13,000 level, that should be offering great support for investors. Even on, I say a disappointment. The market could be disappointed that the fiscal stimulus maybe quite isn't up to par with their expectations. But don't forget, China has been stimulating their economy for like the last year and a half, 2 years. And so that there is something to be said for that. So any dip over the weekend in risk, any dip in the Chinese markets, first thing out of the gate on Sunday night, Monday morning in China, you might find some buyers just below where we're currently trading. That's one thing I wanted to discuss before we actually get into all the events in the week ahead. I also want to talk about the stock market. Stock market continues to trade at all-time highs. But if you remember last week's week ahead video, we were looking for us to get to this resistance around the 58.35, 58.50 level. We are closing in on that at the very end of the week. It is Friday. The market is still open, so I'm filming as the market is wrapping up things for the week. But as you can see, we're closing in on that really critical resistance, which we're going to talk about a little bit more in technical detail as we go out throughout this video. So make sure you all stick around for that. But stocks are at all-time highs. Gold's at all-time highs, and you have to think about why those are happening right now. Well, why are stocks still at all-time highs? Because you still have a Fed put. Now, granted, the data that we've seen the last couple of weeks still suggests that maybe the 50-point basis cut from the Fed might have been, and I know a lot of people are finding it laughable, might be a little bit laughable, especially after the jobs report that we saw a week and a half ago. Inflation seems a little bit stronger from a CPI standpoint this week. However, the Fed is still trying to navigate lower rates to bring the Fed funds rate back down to their what they would consider nominal. So as a result, you still have that Fed put in the market. Do I think there's risks around this current environment? Of course, growth risks. We're going into earnings season, which we're going to be talking about in the next couple of weeks on these week ahead videos. So make sure you are all sticking around for that. All right. Before I get into the analysis of what's happening this next week, I do want to mention that if you haven't taken a look at the Trader Funding Program, make sure you do so. We've offered a 20% discount to all assessments last month in the month of September. We're doing it this month in the month of October. And it's the first time we've offered a 20% discount. But what's most important is if you're new to the Trader Funding Program. So if you're trying to access $25,000 all the way up to $1 million in capital, if you take a new Trader Funding Program, not only do you get a 20% discount, but you also get a one-on-one 45-minute session with me as I get to show you all the tools that you have available. Some of the benefits with being the Trader Funding Program is also having access to Forex analytics for a period of time. And also, I'll share with you how I passed an assessment. And I think that will give you maybe some ideas on how you might easier pass an assessment as well. But really, if you want to trade somebody else's money and not put any of your own money at risk, aside from the money that it costs to take an assessment, then check out the Trader Funding Program. And it's a great option for traders that don't typically have a lot of money to access. All right. Next week, one of the things that I didn't mention and I want to talk about a little bit this week, we had 19 Fed speeches from Federal Reserve members. Next week, we still have 10. And it's created volatility. Every time there's a Fed speaker, we see some volatility in the markets. That's going to continue into this next week. There are obviously other things that we're going to be focused on as we go through this next week. And you can, with Forex Analytics, you can follow along in your calendar that's located right to the right-hand side of the platform, next to the live Squawk feed that you see here. But the thing is after the data that we've seen the last couple of weeks, whether you're talking about the jobs report, whether you're talking about the inflation data that we just got, the important thing is to hear what the Fed governors have to say, especially just coming off of cutting interest rates by 50 basis points last month. It's going to be really important to hear their words and hear what they have to say. So be mindful of all the Fed speakers that are coming up this next week as well. They are moving the markets. They moved the markets this week, and next week will be a lot of the same. All right, now let's start off with Sunday evening. As I mentioned, we are going to have Chinese markets opening to the what the Ministry of Finance did as far as offering some sort of fiscal stimulus to the market. Did they provide support? Did they not? And if they didn't, could we see a continued sell-off and a reversal of everything that we've seen over the last couple of weeks? Like I mentioned earlier, I believe that dips will be bought. I think the 13,000 level in the China 50 is going to be very important to be watching as we go into the beginning of the week. One of the other things that is happening actually on Sunday is the RBNZ Reserve Governor will be discussing, and this is the Kiwi. This is our drawings from last week. If you guys don't know this, I update these charts every week. I thought we would find some support down here. We actually found support at a pretty key level. Let's get rid of that. If you look at this long-term trend line, we actually came right down to that long-term trend line and the 618 retracement. So, RBNZ's will be speaking on Sunday night, which will be Sunday night for myself and a lot of the rest of you, but it'll actually be Monday morning in New Zealand. Watch this level in the Kiwi because the RBNZ did cut rates by 50 basis points this week, which was expected, but the Kiwi traded actually after the initial shock of moving lower, it's actually bounced quite a bit. So the question is, will the Kiwi be able to stage a recovery following Orr's comments on Sunday night, which will be Monday morning in New Zealand? The flip side is below 60.50, it becomes very bearish. We start breaking a lot of key levels of support below 60.50 in the New Zealand dollar. So just keep that in mind if you guys are trading around the Kiwi. Monday, it is a US holiday. Monday, we have Columbus Day in the US, and also in Canada, Happy Thanksgiving. It's Thanksgiving holiday in Canada on Monday. So as a result, liquidity might be a little bit worse. We will have our normal broadcast as we normally do, because Columbus Day, even though it's an observed bank holiday, there's still a lot of traders around in North America, so we will still have our free shows. So for those of you that are wondering, yeah, after Europe leaves, you know, the markets might get a little bit more quiet, but bank holiday on Monday in the US and in Canada. On Tuesday, one of the big events that's happening Tuesday morning is going to be the UK jobs report. Now, last week we talked about the importance of the 618 and if that ever breaks. Matter of fact, I'm not even as focused on that level this week, even though we still had that false breakout. We talked about how the false breakout would lead to continued weakness. What I'm really focused on now is the 130 level. So you can see this 130, 130.20 level, I think is going to be important support, okay, right through here. Now let me share with you the reason why I think that level is going to be so important when you're talking about the 130.20 levels right here. I'm going to do a little bit more drawing for you. Let me go out to a daily chart. Okay. And I want to do this with you. Let me get rid of that trend line there. We're going to take this high right over here and drop it through this high, that low. You can see that high right there, this low right there. And this takes us to what I think is we were coming out of is a triangle pattern. So let's remove this trend line really fast. So as we broke out of the triangle gave us a nice bullish move outside of that. Now the problem that you've seen is that you've seen this false breakout of, whoops, let me grab the right drawing tool here. You've seen a false breakout of those levels. Now, if we get back below 130, I believe that's where we actually have to turn bearish in sterling. Now, that is also what you might notice here is a 38% retracement of this entire move higher. So 130 is going to be a big level, a big pivot for sterling. But one of the other things I wanted to mention regarding you know, the pound dollar is that the UK budget is going to be very much in focus at the end of this month. And a lot of people are increasingly becoming bearish on sterling ahead of the UK budget. So just keep that in mind as we navigate through October and we get towards the end of the month. I think it's going to be a big pivot here. And maybe you might have to take cues from what's happening in the broad-based dollar index, which we're going to talk about here in just a second. All right, one of the next thing that's happening on Tuesday is going to be the Canadian CPI. Now, we just came off a Canadian jobs report, and by the way, the Canadian jobs report was strong. We talked about last week about if we could break back above 136.20 or 136.10, excuse me, it'd be very bullish. Well, that happened, and it happened pretty aggressively, right? So with that being said, you can see where we've stalled. We've stalled around this 618 retracement. I also want to show you something else. For those of you that have been paying attention on Forex Analytics or on our daily shows, let me just show you how important that level is. Because if you go to all the analysis that we've been updating you throughout the course of the week, by the way, this is all week, the analysis, and every time there's an update, that update gets pushed to Forex Analytics and to your mobile device if you are in the Forex Analytics community, or if you're in the chat room, you'll see it there as well. One of the big things that we've seen this week is we've seen the dollar CAD make it to, here we go, you can see it right here, the 161% extension today when we reached 137.48. And we noted that that would be a very big level of resistance And was it? It was, actually, because we had that Canadian jobs report. So as a result here, we're stalling ahead of that 161% extension, and then also that 618 retracement. So a lot of big levels in the dollar CAD coming up. But I'm going to tell you this much, that now that we're above this level of resistance, now we're above this level of resistance at 136.50. I expect that to be very, very strong support on dips. Okay. And there you go. There's your 161% extension and how it stopped the dollar CAD. So can we go further from here? The answer to that question is absolutely, especially if we have a weak Canadian inflation print. I've always thought, and you guys have heard me say this on this video or on this series of videos, that I think the dollar Canadian is going to 140. It's gone up quite aggressively over the last couple of weeks. Is it worth chasing up here? It could be. I just don't know if I'd want to do that personally. But I am looking to buy dips. That is what I'm going to be looking for. Now, on Tuesday, we also have the Empire State Manufacturing data coming out. And at this point, I think I'd like to talk about the dollar index, because the dollar index has made a substantial, and you can see it right here, we've made a substantial recovery, hitting the 161% extension of the last leg lower, and then also hitting the 50% retracement, basically, you're going to say roughly within about a couple of pips. We came really close to that 161% extension. The thing about the dollar index is I don't know if this triangle or previous triangle that we were looking at is so important anymore, because what I think we're dealing with is a much just broader based range at this stage of the game. But what's going to take the dollar higher this week? I don't think that it is going to be economic data, because we don't have a lot of economic data that we have retail sales, which I'll talk about here on Thursday. We have retail sales that's coming up this week. But maybe what pushes the dollar index is the ECB, but I don't even think that is going to be the case this week, because the ECB is expected to cut rates. I don't think they're going to be any more aggressive, and I can't imagine they're going to be more dovish than they already are. It just seems like a steady, they'll be cutting at 25% increments, maybe not at every meeting, but maybe that will be the influence of the dollar index. But what you can see at the dollar index is, remember, just a couple of weeks ago, the market was extremely bearish, the dollar, as we're at lows. And remember, we talked about this 2 weeks ago. We created a false breakdown, which should lead to a breakout to the upside, which it has done. So now what we do from here is just a little bit more tricky, especially without an FOMC meeting. And now that we're past the jobs report, without another jobs report coming up in a few weeks, it's going to be a little bit trickier with the dollar. We might have to rely on risk aversion or risk appetite, which obviously we have a lot of risk appetite right now, or maybe what happens in other markets like with the ECB this week. So that's the dollar index. We are getting close to, I consider, pretty big resistance, whether you're talking about the 50% retracement or the 200 DMA or maybe even the 618. But I should also note that from where we currently stand, any dip back down to 101.90, which would be right here, should be very well supported. Any move up to here probably will find sellers. Unfortunately, we happen to be in no man's land right now as far as the dollar goes. So we're kind of in the middle of this where I think an expected range could form. All right, continuing along with going into Tuesday. Now, we already talked about the Kiwi, but the New Zealand releases their CPI data Wednesday morning, which would be Tuesday night. Maybe one of the currencies that we should be focused on is the Aussie Kiwi, because just a couple of weeks ago, we talked about the Aussie Kiwi getting to the upper end of the range or the lower end of the range. So guess where we're at right now and what we're rejecting? We're rejecting the upper end of the range, aren't we? We went right up to 111 this week, or very close to, and found some resistance. So when you're dealing with the Aussie Kiwi, I think you got a lot of resistance up at these levels. But the flip side is, on any dip, you're probably going to find some pretty good support. So if you want to, talk about navigating through the Kiwi, it's probably going to be in this near-term range for right now. And so any strong inflation coming out on Tuesday night or Wednesday morning in New Zealand, probably going to give us a little bit of a jolt here. Wednesday, we have UK CPI. Now, I did talk about the sterling, and I talked about how we're sitting on really key support. I also want to talk about the euro sterling. It's a quite popular pair, and we haven't discussed it in quite some time here on the week ahead video, but let's do that. So when you have the euro sterling, and I just deleted all of the technical levels that were on this chart so we can start fresh. What I'm going to observe is that this resistance zone, because this is previous support, we overshot it, but we got slammed right back down. So what that means to me at this moment in time is if we break this high, now that high, you'll also notice, let me grab this really fast, is the 78% retracement of the last move lower. And by the way, this is holding a 618 retracement. In case you didn't know, I'll just draw it for you real quick. You can see it. Whoop, there you go. You see it? 618 held. Delete that. If we get above 84.34, that's this level right here, it would be very bullish. The flip side is, if we continue to hang out down below 84 cents, I think the risk of a further decline is quite high. Now, going back to what I was saying earlier about the sterling just in general, if you keep that in mind, sterling looks a little weak. We start breaking below 130. That could give a boost to the euro sterling as well. That's something that I would be keeping an eye on in the event that the pound dollar breaks below what? Correct, 130. All right, so just keep that one in mind as we move along throughout the course of the week. All right, Wednesday we have UK CPI. Wednesday night we have the Aussie jobs data. Now I'm gonna spend a little bit of time on the Aussie, because the Aussie's a little tricky right now. And let's delete this, because we talked about this week about how important this was. Why do I have that circle drawn here from last week? You guys all know it. Well, it's a 38% retracement. You see it right here, right? I said, hey, this is going to be important support because it's a 38% retracement of this move to this move, and we basically stopped and bounced. Okay, so you guys seen that? It happened just as we talked about last week. So now what do we do with it? Well, the importance of what just happened is this. Let me delete this. Let me get rid of that. I'm going to get rid of this. We don't need that for right now. And I'm going to leave that there for a moment. In this trend line, I'm going to be a little bit more loosey-goosey with it. We're going to do like that. Okay, now I'll zoom out. And the problem, or not the problem, the issue is, well, maybe the issue or the problem, whatever you want to call it, is I believe that this support is much more significant because it's this previous trend line, it's the 38% retracement, and we've now respected it, meaning we bounced from it. So what that tells me at this moment in time with the Aussie dollar, especially with the Aussie jobs report, is in the event that we break below this week's low. So let's zoom in a little bit. Okay. If we break below this week's low, that, jot this down with your pens, it's 67 cents. If we break below 67 cents, it's bearish. There's no other real explanation or nothing else for me to say regarding the Aussie. So what's happening on Wednesday night, which is Thursday morning in Australia? Aussie jobs. It's going to be important, especially if you're trading the Aussie dollar. Okay, moving right along. One of the other things that's happening on Thursday, did I say Wednesday night? Yeah, it's Thursday morning in Australia. Thursday is going to be the ECB rate decision. So let's talk about the euro and where we're currently at. So the euro is trading well below the 110 level. We talked about that being big support zone, breaking through 110. It's quite bearish. We closed below it last week. Expected lower levels. We got it. Now, you'll notice that we're finding some support around 109. Everybody should be aware, and I'm going to go ahead and, because if you listen to our free shows, you already know this, but the distance between here and here, that double top, actually points to an eventual move to 108. Okay, so eventually this is where we should end up. And that is going to be my downside target as long as, I'm trying to draw something here, as long as, give me 1 second, there we go, third time's the charm, as long as we remain below 110. So where the euro stands right now, it's very simple where we're currently at. Any move up to 110, I'm looking to sell it. Any move back down to 108, we might find some buyers. Okay, do you guys understand that? We're just trading in between this really big range, and I'm going to redraw this one here. There you go. It looks a little bit better. Any dip to 108 should find buyers. Any rally to 110 should find sellers. Now, since we are in a double top formation, that means near term, my bias is bearish. And if you don't know why my bias is bearish, well, you can go to Forex Analytics and go, why is that, Blake? Well, you have a bearish bias on, on the bias chart. You can see right here. Bearish bias on the bias chart. And this is something that we build every single day with all of these instruments. I go through each and every one of them with you live in the market if you're a Forex Analytics subscriber. The show is called The Morning Edge. So if you want to know where we get that bias chart from, it's because I, with the help of Steve, go through all of these different instruments and then some, and give you all the key levels to be looking for every day. So again, if you're a Forex Analytics subscriber, you know how important that 109 level, and you know how I have a bearish bias right now while we're below 110. That continues on going into this next week because the ECB could give us reasons for a bounce in the euro towards 110, but I'm going to use that as an opportunity to be on the short side. So there's your what's happening on Thursday with the ECB, but also right at the same time during the press conference or around the press conference, we're going to have U.S. retail sales. Now, we already looked at the dollar, but what I do want to share with you right now is I want to share with you what I had up initially when we came to this. Was talking about when we started discussing. Sorry, it's Friday afternoon. I'm talking a little funny. We talk about 10-year yields. 10-year yields are closing in on not only the 161% extension of the last leg lower. You can see this is the last leg lower, 161% extension, but also the 127% extension of this entire move. So the reason why I mention that is because if we have strong retail sales and the dollar gets a spike up, U.S. yields will probably get a spike up. But I think that 413 level in the U.S. 10-year is going to offer really significant resistance for traders this next week. All right. Now, as we go throughout the rest of the week, we have weekly unemployment claims, which, by the way, I did a video and I did an interview with Jim Welsh from Macro Tides. He talked about the government jobs numbers came in during the weekly unemployment claims, and they came in, substantially higher. He believes they, could it be? Oh, where's my tinfoil hat? Okay, it could be a little bit more manipulated with the government numbers, especially if you look back, several years before. You got a little bit of seasonality, but not as aggressive as we saw. But anyway, weekly unemployment claims really moved the markets this week because they jumped up higher. So we'll see if we can get a repeat of that come this next week. One of the other things that's happening actually on Thursday night is we have Chinese GDP. We have Chinese retail sales, industrial production numbers. On Friday, we're going to have South Africa inflation data, and then U.S. building permits, and then the Treasury currency report, where the U.S. Treasury will name themselves as the top currency manipulator in the world. Of course, they're not going to do that. Should they? Yes, but who are they going to name? They're going to name China, So anyway, the Treasury currency report will come out on Friday afternoon or Friday morning. So maybe we'll all get a good laugh out of that one. You have to be a currency trader to really giggle at that silly joke. Anyway, okay. Before I get into what's happening with gold, copper, crude, the rest of the bond market, the S&P, the Nikkei, before I get into all that, let me just say, if you like these videos and you think they're very beneficial for you and helping you draft up a good trading plan going into the next week, make sure you give me a thumbs up, give the team a thumbs up, comment down below if there's something that I might have missed, because I probably could have, that might have been really important, that might be really important this next week. Jump down below in the comments below. Your support helps us create these videos each and every week for the last 8 years. So if you do enjoy them, please let us know how much you appreciate them. I appreciate you guys doing that for us. Okay, let's get into the other markets. Let's talk about gold. So gold continues to rally to all-time highs. And guess what? Gold broke down out of this channel and then back up there. So do you know what that means? That means that this channel that we referenced last week, that Steve Vagadis, I don't have a good Greek accent. What Steve blogged about last week is, to me, no longer really relevant. What's more relevant is where we trade right now, is we're trading up against what could be a bull flag pattern resistance. So in my view, let's grab the drawing tool here. In my view, gold still looks very bullish. And matter of fact, I would say we remain bullish even above there. But I think we could probably just say, while we're above 2,600, which there would be your lows, you have to remain bullish in the gold market. And remember, the upside target is right up here, which is just around 2,700. Should be about 2,690. You can actually look at this. There's a high. There's a low. And right around that same level, you'll see there's some pretty key resistance up here around the 2,700 level. Now, if it's truly a bull flag, we're probably going higher than what you see right here. That doesn't mean it will, but you know, that's what our projection would say for those of you that are actually trading. Whoops, I didn't want to do that. For those of you that are trading gold to the long side, that your upside target would be well above 2,700 and closer to 2,800. Okay, to the upside, just in the event that it continues higher. All right, copper. I did want to mention that copper is capped at the 618 retracement and horizontal resistance. Now, is it built a double top? Nope. But are we kind of stuck in a range at this point? Yes. I would take this support. Let's grab this one right here and bring it up here. And I would say copper is in the middle of a range. You know, whether copper breaks out above 470 or breaks down below, 4.25, probably has more to do with recession or no recession probabilities globally. So keep your eye on copper. I think it's stuck in a range for right now. Crude, speaking of ranges, crude is stuck between the 50 DMA and the 200 DMA, which you can see right here. Crude found buyers below the 50 DMA and it found sellers above the 200 DMA. So this is going to be your range that you should be playing right now. One of the things that's going to be a driver of crude oil, obviously, is what's happening in Iran and Israel. If things continue to escalate there, crude oil prices could rally. And you have to think about this weekend and maybe look at some of the headlines. If Israel starts hitting some of the oil production of Iran, we could see a strong spike up in crude oil as well. And we get much above the 200 DMA, and that's going to turn the crude oil market extremely bullish from that point on. Okay. One other thing I wanted to bring up, the 30-year ZBs. Not something that I normally talk about on this week ahead video, but I want to bring it up for you guys here. If you take a look at the 30-year, and this is something that we were discussing with the Forex analytics community earlier today, we are finding support right where we should on the 30-year bond market. These are the tradable ZBs if you guys trade futures, but basically this is the 30-year continuous contract. You have this multi-year trend line that was broken, and now we're retesting it. So from where we sit right now, this should be very critical support in the 30-year, which it's finding buyers. You can see that's the circle that's drawn around there. Now, one of the other reasons why that's so important is if you take this low to this high, you'll notice that we are at the 38% retracement. Now, if we can hold at these levels, we might actually be developing an inverted head and shoulder pattern, which would be quite bullish if the bond market broke out. That means that yields would be dropping quite precipitously. And if yields are dropping and the bond's rallying like that, 30-year bond, that probably means economic data has turned extremely sour. We're not there yet, obviously, but watch the bond market here. I think the 30-year could really be at some very important support, as I mentioned just a few minutes ago. All right, now the last thing I want to bring up before we talk, well, actually two things I wanted to bring up before we start talking about the trade setups for this next week, and we review last week's trade setups. I want to talk about the S&P, because the S&P, again, we closed at all-time highs. We are closing in on the 127% extension, and also, if you take this last move lower, this one here, we are almost at the 161% extension. So you can see this confluence of levels is really, where the stock market might find some sellers. I've expected that, and we're getting really darn close. All right, one last chart I wanted to bring to your attention, and I do have it here, is the Nikkei. And let's clean up this. Let's clean up this for a second and look at it like this. What you're going to notice with the Nikkei is we're at horizontal resistance. Let me draw that out for you. We're right at horizontal resistance, which, if we break out much further, you're probably going to see us, take on all-time highs. But remember, the Nikkei is already closed, so it's going to reopen on Sunday night, Monday morning in Japan. We're also going to have that news from China over the weekend, which could greatly influence which way the Nikkei goes at the beginning of the week, this next week. So just keep that in mind as we move forward. All right. At this point in time, I want to talk about the trade setups from last week, and then I'm going to give you my best, or three. They're not necessarily my best, but I'm going to give you three trade setups for this next week. I know some of you are like, well, why not your best? It's because if you're a Forex Analytics subscriber and you're in the trades room, here is the chat room. When you're in the Forex Analytics community, you are privy to being in the chat room. You could also be in the trades room where you can see what positions I'm buying and selling. And, I put a summary of them in the trades room where you can actually see what positions I'm in, what I've bought, what I've sold, what I'm getting out of, what I'm getting into. And this way you can always ask me questions and ask me, because we can have discussions while we're in the chat room on why I'm choosing to play a certain currency pair a certain way. So if you want that type of access to me or to any one of our staff here at Forex Analytics, like Ryan, as you see him here in the trades room, make sure you take a trial of Forex Analytics. It's only $1 for 10 days to try it out. $1 for 10 days to try out Forex Analytics. Download the mobile app, jump in the chat room, come have conversations with us. Okay, so going back to maybe not my best three setups of the week, but let's review three setups from last week and give you three setups for this week. So last week, first setup, sell dollar yen at 149.50 to 150 and a quarter. Well, the dollar yen, and this is what I drew for you last week, the high on, what was that, Thursday, yesterday, we hit a high of 109.59. And we dropped approximately 100 pips after we hit that level. So if you shorted at 149.50, as we talked about last week, and you got out even right now at this moment, you would only made 45 pips, but you could have made almost 100. So did that trade work out? Yes, it did. So first trade worked out. Second, sell S&P on any move to the 58.35 level. Well, this week's highs is 58.19. It's also the all-time highs. So have we gotten there yet? Yeah, 58.20 on the CFD here. No, we haven't gotten there yet. So this trade hasn't taken place yet. So we had one that worked. Second one hasn't taken place yet. The third one, sell Aussie yen at 102 and 102.60. So let's take a look at the Aussie yen. So this week, here is Monday, we went as high as 101.41, and we didn't quite make it there. So we never made it to 102 because we only did about 50 pips shy of that, and then we ended up going down. So one trade worked, two of them did not. It happens. I mean, we came really close on both of those. They came close to executing, but didn't happen. Okay, so what are three trade setups of this week? The first setup for this week, and if you've been listening, you already heard it. I'm looking to sell the euro on any move up to 110. I think if we make it up to 110, remember, we still have a double top, so it is worth trading into. Question is, are we going to make it up to 110? I hope so. The euro's been trading heavy pretty much all week long, so will things change next week? Probably. Has more to do with the ECB versus anything else. Setup number two, dollar Canadian. Now, we just came off a very strong Canadian jobs report. Now I'm looking for any dip down to 136.50 to be a buyer. So I'm looking to be a buyer somewhere down there. Now, situations like this is you just got to hope. You got to hope the dollar comes under some pressure and we can reach for those levels next week. I still think we have a very, very nice bullish setup, and I think any dips down to 136.50 are going to be levels to be on the long side. Last but not least, this is a counter trend trade, but it's going to get the attention of a lot of you, I think. Gold, I am willing to short gold as a counter trend trade below 2,600. So in other words, everybody is very bullish gold. I can't find an argument to be selling gold. Like, there's no real reason to be like, oh, well, gold should be going down. I can't see any. I don't know any. But usually that's the most dangerous time for any type of asset, is when you can't really argue why it can go one direction or the other. So in this case, on any break below 2,600, I am looking for a quick counter trend trade. Not very far, but I'm going to be looking for a counter trend trade probably down to some support like that. All right. So that's what I'm going to be looking for as we go into next week. And I just want to say, if you guys found this video beneficial, make sure you give us a thumbs up. Subscribe to the channel. It's free to subscribe. It's free to comment. It's free to like. Hit that little thumbs up. And it's almost free to take a trial of Forex Analytics. It's only $1 for 10 days. Download the mobile app, jump in the chat room, spend the next 10 days talking with me and all the other traders and analysts at Forex Analytics, because we'd love to see you. I want to thank you for spending your time with me on this week ahead video. I know it's a long one, but hopefully it helps prepare you for your trading week, because it's a long week every week of trading. So hopefully this just helps you out. Anyway, I want to thank you for spending your time with me. I know it's your most valuable asset. So my name is Blake. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.